The most important thing I would say is that don't bucket India as a geographic limit. Think wider. So the core India thesis, I guess, should be around talent. If you look around, you'll see Indian origin people from Satya Nadella to uh, the graduate hire at Shell. That is, it's 1.4 billion people. It's 40 million outside India. It's it's a key driver of alpha all around the world. And so you should think about it from a talent dispersion perspective rather than the geographic boundary of India. I think that would be my top tip to an allocator looking at India as to how to unlock real alpha from the India allocation.
Hello, everyone. This is the One Point Podcast, and I'm Rohit Yadav. We recently released a very comprehensive ecosystem wide report called Rethinking Venture Capital, a Strategic Lens, in which we explore the entire value chain of venture asset class. Now, within this overarching strategic report, topics like the Indian ecosystem and its growth could not find the right place. Hence, I'm on this journey to uncover such meaningful topics by inviting venture experts who can decipher the landscape. So today I'm excited to welcome Shwetank Verma, founding partner of Leo Capital. He has been an entrepreneur himself in the healthcare and education spaces and has built businesses from ground up. And at Leo Capital, he leads investments which are outside India. So that's kind of an interesting aspect we can cover with him. Another interesting aspect is Shwetank is a co-founder of the Indian InsurTech Association, which is already doing phenomenal work. And I would recommend you guys to read its 2024 report in partnership with BCG. So with that said, Shwetank, thanks for joining in.
Rohit, thanks for having me on your show. Excited to be here.
Awesome. Let's just dive in. What is Leo Capital?
Starting straight. Leo, we're an early stage tech VC. We like to call ourselves India's first global VC.
Mhm.
So we are operators turned investors. Leo was started in 2018 by Rajul and myself. We're both entrepreneurs who, were active angels and then decided to become venture capitalists to sort of support founders and add that operating layer that we thought was helpful. Fundamentally, it was more about also working with great entrepreneurs. It's the most fun thing you can do, and that's how Leo started. So we're an early stage tech VC headquartered in Singapore, investing globally in what we call the Global Indian Alpha, which is primarily founders which have either an Indian origin or a desire to build with the India advantage. So that's either building talent in India or ultimately doing market entry in India. But it's a pretty broad lens, and we're excited to have been, investing in the US, in Europe, India, of course, and Southeast Asia.
Okay. Can you expand on this background of Leo? So you both were operators, you did some angel investments. So what pulled you into this venture capitalist space?
Yeah, it's a good question. So, my own journey, I built my first startup in the UK as a 19-year-old, and then worked with a couple of family offices and moved back to India in 2012 and was trying to build a startup in India. That's when I met Rajul. Rajul has been a fairly successful founder in India. He co-founded a company called Global Logic, which was acquired for 9.6 billion a couple of years ago, and also co-founded Pine Labs, which is going public now. So Rajul was already an active angel at that time, and he angel invested in my company. That's how we got to know each other. He invested, and he was on the board. And I think for me, it was a good learning in how hard it is to build in India for the Indian market. So I had a bit of a slog in India, and I think Rajul really helped me sort of think through how to sell the company and figure out what next. After selling the company, we decided that Rajul had become a more active angel. I had been writing some smaller checks, and so we decided that actually, given neither of us wants to do another startup, we don't want to do the whole 0 to 1 journey again. And
Okay.
quite frankly, mostly unemployable by a large corporate or anyone else. So the only real solution left was to, make the angel hobby the professional thing. So that's
Okay.
how Fund One came together to
Okay.
professionalize and institutionalize what we thought we could bring to founders, being that blend of both investing and operating experience, and
Uh-huh.
do it more formally, add more heft to the cap table, spend longer time associated with the company. So those were the thoughts that sort of led to the formation of Leo. And the other thing was we felt that we were seeing this great globalization of India, of the Indian talent. We've lived it. Rajul and I. Rajul spent a fair amount of time in the US. I spent a fair amount of time in the UK. And we felt that there was nobody really playing for this global India play. So
Okay.
entrepreneurs who say grew up in India but then moved to the UK or moved to the US, they were raising primarily from US or UK funds because the Indian funds, it's harder to invest outside, right? Given if
Mhm.
you're a local Indian fund, if you're AIF, it's hard to invest in a Delaware C Corp or a London company. So we felt that there was interesting blue water, blue ocean there to truly tailor our services to global Indians. And I think since 2018, we found that that is true, and we've had some good successes doing that.
Okay. So, which is a perfect segue into the next question. Like, what really differentiates Leo from the other VC funds? So, you covered the operational element. You have been founders yourselves. So you have seen the journey. You have done angel investments. You're focused on global alpha. So, maybe you can roll all these three ideas into one answer. What differentiates Leo from other VC funds?
Yeah, it's a question that comes up obviously always. It's a question you ask founders as well. What differentiates you? What's your moat? And honestly, the answer in venture is there is not much of a moat or differentiation, right? We all provide capital, we all provide you, connections, networks, other things. I think one thing that Leo does well is we help you understand how to think about your talent stack. What do you need? Where should you do it? How do you build it in the most capital efficient manner? I think that's
Okay.
something we do better than say a lot of VCs who have not been in India, who have not seen this cross-border play before. But ultimately, I think it boils down to relationships, right? And
Okay.
how do you build the right rapport and relationship with the founders? What a lot of VCs call founder love or being founder first, being founder friendly. And to my mind, that is not just always being a cheerleader or, saying yes, 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 but being the person who can tell you the harsh truths, help you confront the brutal facts, show you where things are going wrong with you rather than just the business, etc. But do that from a place of deep respect and deep love and a deep understanding of what you're trying to build and the sort of rigor and the challenge it takes. Look, building something is hard, and
Mhm.
having done that, two times myself, Rajul having done it three times, I think we have a deep appreciation for that, which I think comes through in the relationships you build with the founders. And ultimately, that is the factor that I think differentiates us the most, that these become very close friendships, almost family type friendships over time, rather than just transactional business relationships. So that's what at least attracts, that's what makes me the happiest about the work we do at Leo. But on the functional side, yes, we help you build the right tech team. We help you figure out how to enter the US market, how to find the next round of financing. But those are
Okay.
transactional, the relationships that matter.
So I love that you kept the relationships right on top before the transactional stuff. So with respect to this Leo fund, how big are the funds and so on, gives you an edge over the funds which are, let's say, formed in India right now. And on the second hand side, do you think that you being present based out in Singapore, London, Europe, as well as other locations give you another kind of element of edge?
Yeah, so our structure to be based in Singapore was thought through for this reason that allows you to invest easily in global markets, right? So we can invest without regulatory approval in the US, in Europe, in Australia, Southeast Asia, wherever. So Singapore is this great global sort of makes it much easier. You don't need, there's no capital controls, you don't need approvals.
Yeah.
So for a global mandate, and again, if you're trying to target sort of the global Indian diaspora, it's a great place to be headquartered.
Okay.
And I think that that regulatory advantage is a key advantage over say India-based funds because in India, the rules require you to get approvals if you're investing outside of India, and a lot more hoops to jump through. So the
Okay.
time it takes to complete a round
Hmm.
is just a lot longer versus with us. So that's just a
Right.
regulatory edge. I
Hmm.
think the other edge is really cultural. The more you do this kind of investing of, globally, you're working with founders in Germany, you're working with founders in the UK, in the US, you just get more attuned to how to build these cross-cultural plays and that muscle.
Yeah.
And if you're only investing in one geography, it's just hard to build that muscle. So I think the fact that we've been doing it for almost 10 years now, over 70 companies, just gives us that added institutional know-how, institutional memory, which I think a lot of funds which haven't done this will find it hard to just sort of catch up to it instantly. So I think these are
Got
the two sort of key drivers for how we have separated ourselves at Leo. At Leo, we manage now four funds, so three Asia US funds, and then one Europe fund. Fund sizes are sort of, the Asia funds are in the 75 million range
okay.
and 70 or 80 million range, and the Europe fund is 15, 20 million euro fund.
Okay. Got it. And so this has been a long journey. So four funds, launching four funds, expanding on those four funds, it's not easy, right? A lot of fund managers just wrap up after fund one or maybe fund two, right? Not a lot of them actually reach to fund four. So what has been your journey emotionally within Leo Capital while building it, scaling it?
Yeah, it's a good question. I think the emotions of fund managers are hardly ever asked about. I used to say that I started a fund manager because the sine curve for a fund manager is less than an entrepreneur. That is, an entrepreneur, you have much higher highs and much lower lows. And I felt
Okay.
that the sine curve for a fund manager should be, lower amplitude, less sort of highs, less lower lows, because you've got portfolio, all of that. I think when you're a founding fund manager, it's probably not true. It's the same. You're effectively starting a company. And I think it took me a while to realize that actually we are building a fund management franchise, not single funds.
Yeah.
So it is very much a startup, and it's actually the same amplitude. I thought I was getting off the startup wheel, but I wasn't. I was just getting on, keeping on the treadmill. So look, it's the same as a founder. You get a large LP. The days are fantastic. You spend, you do a site visit, DD with a large LP, you go 9 months with them, spend so much time, and then they turn around and say, no, it's not a fit. That's a crashing low. Your company gets a term sheet to be acquired for hundreds of $1 million. Fantastic. The transaction falls through 6 months later.
Yeah.
That's a pretty low bar on the old sine curve. So I think over the last 10 years, we've seen our fair share of all of this, right? The highs of the LP, some great LPs committing. And again, we've been able to scale this far because we have some fantastic LPs. And, especially I'd like to sort of call out Sandana Capital, who helped us really figure out how to become more institutional, build out the team and build out our processes to, having this whole set of great things happening, bad things happening. But, it's the same. I think it's the same underlying thing that as a founder, right, you have to be fundamentally optimistic that tomorrow will be better than today, and that's what helps you keep going.
Okay. And you mentioned about portfolio companies getting acquired, portfolio companies, let's say, crashing in some sense. So tell us the wins from your portfolio and some of the learnings from the failures from a startup portfolio perspective.
Yeah, maybe Tolstoy said, right, that all happy families are alike, and each unhappy family is unique in its own way, kind of thing. So the failures are all unique, but they teach you a lot. So the key thing it teaches you that it's a tough business. It's
Mm-hmm.
really hard to predict, who the winner is going to be. You may think that backing a serial entrepreneur who's built two fantastic businesses in the past is a slam dunk, but
Mm-hmm.
the execution risk remains high there as well. And those things can go off the rails. The what's it called? While a first-time founder can, absolutely hit it out of the park.
Mm-hmm.
For us, I think as a fund manager, the biggest learnings have been that the companies that are giving you pain will typically keep giving you pain. So things
Okay.
like bridges and down round fundings, etc., are very difficult things to navigate.
Okay.
It's very hard to turn around a company that has not been doing well.
Mm-hmm.
It's very hard to bridge a company that's struggling to raise external capital to get it to an outcome that is meaningful for the fund. I think those
Okay.
have been sort of my biggest learnings from failure. And I think the other thing is just that there was a period in time, which we're thankfully now behind us, where
Okay.
capital had effectively become free,
Mm-hmm.
in which case there was just too many companies without product market fit being alive for too long, right? So
Okay.
as an early stage investor, I think the other thing is to figure out if you're not getting PMF, how do you sort of take it to a logical conclusion and move on?
Okay.
So one of the things we've learned to do is do a lot more M&A activity for companies that we don't think are going anywhere and
Okay.
helping them find homes in a larger company, so that it comes to a logical conclusion, because otherwise a lot of emotion gets invested in companies and founders. I think one mistake founders make is interlink the failure of the company with their own personal failure. And
Mm.
it's not the same thing.
Okay.
Founders don't fail, companies fail most of the time. I mean, founders only fail if they've done something mendacious or fraud or something. That's different. Assuming you've not done that, it's a company failure, not your personal failure. I think that emotion is hard to unpack. So a lot
Okay.
of people sort of keep going for a lot longer than it's good for them, good for anyone else. So I think being able to help founders figure that piece out, when does it make sense to actually say, okay, this is reached the plateau or reached the logical end state and we need to find a home for this business
Okay.
versus, hey, let's give it one last push or one more portion. There's the third bridge around with existing investors.
So, Shwetank, you mentioned all, let's say, the learnings from the portfolios that you got. What were the highs of your portfolio? What are the things that you want to highlight?
So on the success side, Rohit, we have quite a few companies that have done well, but couple of companies that are very close to my heart. A company called LambdaTest. So LambdaTest has built a testing suite used globally. We seeded this company. We were first check investors, and the company was
Mhm.
just a concept. Company has
Okay.
grown to almost 50 million in ARR over the last sort of 6 years. It's been
Wow.
really good growth. And I think the key thing here is the phenomenal execution once the AI wave hit. So they
Okay.
built a testing product, but how us team have built Kane AI, which is fully an AI-led testing product, and transformed the company from a pre-AI company to an AI company in the space of 6 months, and moved a significant amount of the revenue from the pre-AI product to the AI product. Is just
Okay.
a masterclass in execution and understanding where the world is going and how do you want to get on top of that. So I think with Lambda, we've learned a lot. I've learned a lot from watching Asad and Jay sort of build it out. And it's a true example of building from India for the world. So we have a case study on it on our website on how they've done US go to market sitting out
Mhm.
of Delhi. It's all outbound, cold outbound, and they've got to 50 million in ARR, right? So you can see that it works. And their office is worth going to at about 9 p.m. India time, because that's morning in the US, and you can see the calls happening, emails being sent. It's fully alive at 9 p.m. because it's working US time, and
Okay.
they've cracked the code on amazing capital efficiency. So almost next kind of burn ratio kind of thing. So amazing
Mhm.
company, it's really hitting its stride, and we're excited to see where it goes from here.
Mhm.
The other company that I'd like to talk about a little bit is a company called Atoa Payments. It's a
Mhm.
UK company, Indian origin founder and an Irish founder. They took inspiration from Paytm and UPI and saw that how you can use that in open banking to reduce merchant dependence on card networks and primarily improve the merchant economics, right? So you go from a sort of 2.5% fee that the merchant pays for
Yeah.
accepting payments to sort of 1%. So
Mhm.
again, we seeded the company's grown remarkably quickly, added a full suite of products for merchants where there's a distinct service time, right? So hairdressers, spas, etc., where the cost of this kind of payment really matters. And funds like Valar, etc., have invested in them since then to sort of showcase that their growth is interesting. So this is an example of an Indian insight going out to the world. So
Mhm.
Lambda was India for the world, build in India, sell to the world.
Mhm.
And Atoa is more like learn from an experience of a scale up in India and see how
Okay.
it applies to a advanced market. And it's a great thing because in India, as you know, in UPI the merchant discount rate is zero, so you can't make money on payments. While in
Mhm.
open banking in the UK, you can charge 1.25%. So you make significantly more cash on each payment than you would. But you can learn a lot more about, things like how you do merchant retention, how do you do things on the loan side, etc. So great example of studying and learning from a scale up in India and applying the lessons to a developed market.
Awesome. Great to hear the portfolio success. So for the next section, I want to zoom out and I want to talk about the Indian ecosystems. Shwetank, you two have been founders within the Indian ecosystem. So you have seen the startup ecosystem evolve, the venture ecosystem evolve in the last couple of years. Please shine a light upon what are the top features that you have seen happen in the ecosystem for somebody who's sitting outside LPs, GPs, and who want to see India and who want to think of India as an investment destination.
Yeah, it's a good question, Rohit. I think, take it slightly longer than 2 years. Sort of, I'll go back to 2012 when I started my company in India. And the question that our relatives and everyone asked was, "What happened? You couldn't get a job?" Like, is that like, so it just give you a sense, right? Being a startup founder was not really an option. It was considered like a failure, right? You because you only did it if nothing else worked out, or you couldn't find a well-paid and respectable job for a large swath of India. So that was the sort of thinking behind it. If you fast forward it now, if you ask, graduates of the B school or IITs, etc., they don't want BCG jobs or McKinsey jobs. They want to be at a startup looking to do then their own company. So
Okay.
the big change has been in how entrepreneurship has gone from being socially slightly tough choice to being a very socially accepted choice and a well understood choice. And that has been a history of obviously seeing a lot of wealth creation happen in companies. Obviously, Flipkart's sale for 20 billion was a massive moment, but plenty of
Uh-huh.
other companies have done well, and a lot of stock market listings, especially over the last 2 3 years. Companies like Nykaa, Zomato, Paytm have all gone public and have massively increased the visibility of the startup ecosystem for the country as a whole. So the level of entrepreneurial activity and just the energy in the company on the entrepreneurial side has just gone through the roof over the
Uh-huh.
last 2 3 years. It has also been helped by government policy. There was this whole Startup India theme, which again made it easier to understand what starting a company means, what it implies, and how it's actually accessible by a lot of people, not just the well-connected or already rich kind of individuals. So at the
Okay.
highest level, I'd say if you're a LP looking at India, you should go to India. It's really important that you go there, spend 5 6 days in Bangalore, and just see the level of entrepreneurial energy, enthusiasm, and excitement. Right, that's it's at a
Okay.
different scale to pretty much anything else other than say the Valley and perhaps parts of China, which are slightly harder to access as a non-Chinese speaker. So I would say that's the number one sort of fundamental shift driving change in the venture ecosystem. The other good stuff that's happened, a lot more now funds, a lot more capital in the ecosystem. That's helpful. A lot more operator first funds. So I think when we started, we were amongst the first founders with exits starting a fund. Now there's a lot more. Girish started his fund together. Inuka Capital. There's a lot of funds where solid operators have come together to offer capital. So I think that's another good improvement in the ecosystem that is happening. A lot more local LP participation, another very positive thing. So
Okay.
when I started my fundraising, the LPs were mostly foreign institutions. That has changed dramatically for a lot more local in family office participation. So yeah, I think those are the three sort of high level points of the Indian ecosystem, I would say. And then the linkage with the world is very very close, right? I mean, you're sitting out of Germany, I'm sitting out of Dubai. We're hardly unique, right? The Indian diaspora is 40 million strong. That's the first generation people who've gone outside. So 40
Uh-huh.
million means it's a mid-sized European country, or uh, 6 times Finland. But this diaspora is intimately connected to India, right? I'm sure you
Yeah.
go back plenty of times. I go back plenty of times. That part has become also more active. So a lot more, yeah, a lot more founders are moving out, going out to sort of foreign countries and building their startups there. And we've seen pickup in that from the 8 10 years that we've been doing investing.
Okay, got it. So let's unpack a lot of what you said. First was the talent explosion, sort of, right? So initially, it's a kind of not the preferred job, and now it's getting the most preferential treatment, starting your own companies and so on. And this is due to much more education about the good policies from the government. Obviously, also we have seen successes within the ecosystem, so it pulls other entrepreneurs who are young within the ecosystem that this is possible, exits are possible, building your startup is possible, and so on. Second, you
It's a
mentioned,
it's a role model thing, right? So you see somebody who was 8 years your senior at your college having a $20 billion exit. You say, okay, this is something that I should give a run for. So I think the
okay,
role models and that first generation of large exits has really played a big role in opening the doors for many more.
got it. So the role models is one. Second is the explosion in the funds that are active within India. So previously there were let's say operator focused, operator oriented VC funds, but they are now much more different funds, much more different sizes, acting on different kind of stages as well. And the third is there are LPs within the ecosystem who are giving to the venture capital. And previously it used to be the equity markets. Now venture is coming up as a very viable asset class. Does now, having these three outlined, where does the scale and the scope of the type of companies that are coming up, the type of startups that are coming up, play a role? For example, previously it used to be fintech, it used to be e-commerce.
Yeah.
India used to be known for these two things. Now, what do you think is happening?
Yeah, it's a great question, and again, I feel that at the moment remains India remains the best place to be a consumer. Whether that's
Okay.
quick commerce, whether that's fintech, right? You can get a loan and the product without leaving your house in 10 minutes. It's a unique ecosystem of amazing consumer first companies. So the historical play has been that Indian businesses are slow to buy. So the initial wave has been really focused on consumer problems and consumer oriented plays, whether that's a Paytm or Zomato or a Zepto. I think what's changing now, so that's historically been sort of the local domestic India ecosystem, a lot more consumer. We've seen a lot more brand plays come up, right? Things like Minimalist, which was acquired for 300 million by Unilever, to more beauty brands, more luggage brands, etc., which have all become a decent scale. So
Mhm,
one way to think about it is that it's a 1.4 billion market.
mhm.
It's a big number. It's actually not the best way to think about it because very, very different spending capabilities in that number. But whichever way you look at it, it's a large domestic consumption market. And
Okay.
over the last sort of 10, 15 years, venture in India has really solved for the domestic consumption play. The
Okay.
domestic business spend wasn't there. So the domestic business spend was India for the world. The LambdaTests of the world were building in India, but selling primarily to North America. I think
Mhm.
one big change is now that is changing and changing rapidly. So Indian businesses are becoming willing to pay for software and are paying proper prices and are sort of that spend is going up. So you think companies like Perfios and a couple of others build real $100 million plus businesses while selling software to Indian businesses. So that's a big change and a theme that's coming up. And I think the third thing is that what we call, say, deep tech or sort of unique solutions to Indian problems which have a global impact. So things like pixel in space, right? So the cheapest satellite sending systems. So a lot of space technology, a lot of things happening in food, alternative proteins, alternative fibers, etc. So that's the emerging ecosystem. That's the sort of research to production kind of pipeline that the government is promoting. A lot of entrepreneurs are looking at it. I think it's the early stage, but that's where the next sort of say, if you look at 15 years out, I'm convinced you'll see some really global companies come out from these kind of spaces, space tech, food tech, etc.
So, from all the aspects, Indian ecosystem is expanding, right? So this, which is a very good news. One aspect which LPs obviously look at because of the DPI issue is the exits. And India, someone told me, is more about the IPO driven exits rather than the M&A driven exits. Do you think it's correct? And do you think it's changing quickly?
Yeah, so historically India's had tough exit market because M&As did not happen and IPOs also did not happen. I think the big change was that the exchange allowed loss-making companies to actually list about 4 or 5 years ago, and then the market has shown that it is willing to accept losses when there's a path to profitability and massive scale. So that's been a big change, and that has driven an enormous IPO activity, right? Indian market has been amongst the hottest IPO markets over the last 2 3 years. But what the IPO market has done, very interestingly, is created a real M&A exit market as well. Because why were M&As not there? M&As are not there because companies knew that there's no option. So we can buy this cheaply once they run out of funds, we can afford to wait it out.
Okay.
Now companies know that there is an M&A, there's an IPO path. So if we don't buy it, this company may IPO and we may never get to a position to be able to buy it. And so companies are offering real capital and real cash for the first time in my knowledge, at least in India. So we've had a couple of exits. One of them was public, a company called Intraprime Logistics EV was acquired by TVS Motors. Uh, which is a well-established Indian automobile manufacturer, for a decent amount of cash, which would have never happened if the IPO markets are not available. So I
Okay.
think the IPO markets are creating this interesting M&A dynamic. But now both IPO and M&As are on the table for decent exits.
Good to hear. And last thing within this section, do you have some words for the LPs who are looking at the Indian ecosystem?
Yeah, absolutely. Please open your checkbook and sign. Other than that, my advice would be come, visit, have a look. But the most important thing I would say is that don't bucket India as a geographic limit. Think wider. So the core India thesis, I guess, should be around talent. If you look around, you'll see Indian origin people from Satya Nadella to uh, the graduate hire at Shell. It's 1.4 billion people. It's 40 million outside India. It's it's a key driver of alpha all around the world. And so you should think about it from a talent dispersion perspective rather than the
Okay,
geographic boundary of India. I think that would
got it.
be my top tip to an allocator looking at India as to how to unlock real alpha from the India allocation.
Okay, so it ties beautifully to the next topic, which is your beloved topic, Global Indian Alpha. What is that, and why this much focus on the Indian diaspora?
Yeah. So what it is a attempt to sort of capture the value being created by the Indian diaspora. If you look around, you'll see that there are funds dedicated to diasporas from Korea, Greece, Cambodia,
Okay,
Portugal. And when you add all of these diasporas up, there's still a fraction of the Indian diaspora. So the Indian diaspora, I think because it assimilates well, it it's a new diaspora, right? So it's a lot of highly educated people who've gone out over the last, say, 25, 30 years,
okay,
slightly older than, say, some countries like the UK and the US, but it's still fairly new, relatively speaking, diaspora going out. It has assimilated well, and it has sort of been able to raise capital, etc., from the local ecosystem. So it has never felt the need for a different unlike, say, while some of the other countries have built very interesting systems around the diaspora value creation.
okay,
So we thought that the time was now right. If you look at unicorns in the US, there are about 1,000 unicorns in the US, and the country of birth for unicorn founder, the highest is US, second highest is India. So India
yeah,
has 90 unicorn founders, Israel has 45. You think about the Israel startup nation diaspora play, just see how well they've done that for a much smaller diaspora and much smaller sort of overall opportunity from my perspective compared to the
mhm,
Indian diaspora. So I think the Indian diaspora has been a sort of, I guess, almost too successful for a diaspora fund or a diaspora focus. But
okay,
I think it's an interesting opportunity to build around that thesis because it's a proven entrepreneurial set. It's a
yeah,
proven, the results are all there. If you look at the Silicon Valley, you'll see the last generation built companies like Rubrik, Nutanix, Zscaler. A lot of Indian origin founders here have all gone public. And if you look at the current YC batch, etc., you'll again see a significant preponderance of Indian origin founders.
yeah,
So I think there is an opportunity there to again think about the talent piece and think about how it's having a global impact and source and win in that ecosystem, or rather create that ecosystem so you can source and win in it. And that's what we're trying to do with Global Indian Alpha.
okay. And so within this diaspora topic, you said it's pretty new. Previously, the startup founders used to still get the money to start their companies, scale their companies, and so on. So, what has changed now? Why have you been able to establish this global India Alpha concept, and how you're able to compete against other funds? Let's say if you talk about just the YC startup founders, so there are a lot of fund managers who are focused on YC founders. So how are you able to kind of compete against them?
Yeah, it's a great question. I think the one major change that has happened is there's a lot more cross-border teams now. So
Okay.
if you dial back 15 years, you'd have your Indian origin founders with their team either in the US or the UK. There would be no or very limited sort of setup in say India on day one. Might come, much later. Today it's much more common to have a founder in Bangalore and a founder in SF. That frequency has gone up multiple X over what it was, say, 10, 15 years ago. And
Okay.
that has been brought about by the fact that, like us, we're having this conversation, right? So Zoom and COVID, etc., has made it much easier to build these remote teams from day one and have this
Mhm.
kind of a cross-border setup from day one. So I think that's one major change. I don't have exact quantification on it, but it's a major change over the last 5 years, let alone the last 10. So
Okay.
that and when you have that, you need to sort of diligence in both countries, right? You need to do diligence in say the US or UK and in India. So being a
Okay.
cross-border fund, you're able to meet one partner is meeting the founder in India, and the other
Uh-huh.
partner is meeting the founder in London.
Okay.
Very few firms can do that, right? Or the other partners meeting the founder in SF. So being able to build relationships with the company across the borders is something that gives us our edge. the other funds would have only had a Zoom call with the founder in India, or vice versa, right? Only a Zoom call with the founder in SF. We are the only ones who've met both of them, and hence have a strong sort of both the founders have a strong view on whether they want to work with us or not, and that
Mhm.
allows us to win allocations in these kind of businesses. If it's a classical one country only business, there's not that much of an edge.
Got it. Then for the last question, Shwetank, we covered so much of ground right now. We started with Leo. We then shifted to Indian landscape. We talked about the exits. We talked about why India. Then we moved on to the diaspora topic of Global India Alpha. What's next for Leo?
Yeah, so Rohit, we are a decade in to what I thought was a 3 decade journey. So
Okay.
1/3 of the way in. So there's more to come rather than what's happened.
Okay.
Look, the vision ultimately is to build a truly tier one global VC, right? So if you think about the lot of large funds have come out of the US, large funds have come out of India, of China. There's still different parts of Europe as well. There hasn't been a truly global Indian origin fund. That's what I want to build. So the next step is to deepen our foundations in the countries we're already in, the US, in India, build up on Europe, and over time become the partner of choice for highly ambitious entrepreneurs, not just the Indian origin ones. That's our entry point. But
Mhm.
the best founders building the best businesses, I would love to be part of their journeys. That's where we want to be.
Awesome. With that ambition level, Shwetank, thank you so much for joining in and sharing the light on, as I said, different aspects of the Indian story. And all the best to you for what's to come.
Thank you, Rohit.